got to take a look at the US markets, and Sneha, it does look like S&P 500 is really the one holding on to strength.
Absolutely. S&P 500 I wouldn't say is holding on to strength, even though the higher highs continue for that index. It's been just a 2.7 point uptick coming in on an intraday basis for S&P 500. So not much action happening over there. You have Dow that's taken a cut of almost 0.2%, 75 point cut coming in on the Dow as well. However, what was doing well and continues to outperform the market like we have seen for the last couple of trading sessions, at least on Wall Street, is the NASDAQ, because that is up 0.4% and continues to hold on to gains over the last couple of trading sessions. But if you take a look at what the S&P futures were doing, then flat last night, the broad market index also posted a new record close. So while it's been a new record close coming in for S&P, it's not done all that much on an intraday basis. But nonetheless, like I mentioned, the higher highs continue for that index going ahead. If you take a look at some stock-specific action, you had Salesforce and Focus that climbed 10% after the company posted a good set of numbers that beat estimates. Now, during the session, you have S&P that was flat, NASDAQ added 0.4. Both of these indices have once again closed at a record high. So that momentum continues for both of them. Dow was a laggard, declining nearly 0.2%. Now, the major averages have had a tepid start to December. If you take a look at what this month, the last couple of trading sessions have looked like, compared to the major averages, strong November advance following all of that rally that we saw around the election outcome coming in. However, the rallies are likely to pick up again. This is according to experts coming in on Wall Street. Now, if you take a look at the labor market data, this November payrolls data is due on Friday. In particular, it could shape the rally and decide which way the indices head. Is going to be an important data point to watch out for. And data issued on Tuesday showed that job openings total 7.7 million in October, which topped economists' forecast. So we'll also have to see how the markets react to this. Now, today the traders will review an ADP private payrolls report for November. You also have some other important data coming in, like the Services Purchasing Managers Index, factory orders, durable goods. Lots to watch out for, at least when it comes to the macroeconomic indicators coming in from the US. If you take a look at what's going to be happening on the Fed Reserve front, you have the Fed Chair Jerome Powell. He'll be speaking in New York in a moderated discussion Wednesday afternoon US time. So any commentary coming in before that very important 17th to 18th December Fed meeting that we have is going to be important to watch out for. Any hint on what's going to happen, any hint on the direction that they're going to take, the stance that they're going to adopt, all of this is going to be very key to watch out for in today's trade. On the earnings front, then Dollar Tree, Chewy and Foot Locker are among the companies that will be reporting their earnings on Wall Street. So largely that is what Wall Street is shaping up to be like.
Well, absolutely. And let's also take a quick look at oil prices and gold prices then, because oil prices climbed more than 2% as investors hone in on the outcome of an OPEC Plus meeting later this week. So when you take a look at price movements, Brent crude futures, you're looking at an uptake of $1.7 or 2.5% thereabout, and $73 a barrel is the kind of level that you're looking at least when it comes to Brent. When you take a look at US WTI as well, you're looking at an uptick of just about 2.7% coming in. $69 per barrel is where WTI was also at, but OPEC Plus is likely at its meeting on Thursday to extend its latest round of oil output cuts until the end of the first quarter, and that is something that reports are suggesting, at least at this point. So that is going to be providing additional support for the market. And OPEC Plus, of course, which accounts for about half of the world's oil production, has been looking to gradually unwind production cuts through 2025. So definitely that's the meeting that we're watching out for. Let's also take a quick look at gold prices then, because you did have gold rising modestly after a strong US labor report, while a softer dollar as well as easing treasury yields limited those losses as markets awaited more economic data to gauge the Federal Reserve's rate path. Now, spot gold ticked up just about 0.2%, $2,600 per ounce is the kind of level that you're looking at least for gold. But gold, which does not pay any interest historically, does perform well in low interest rate environments. So any cues coming in from the Federal Reserve this week are really what we're watching out for when it comes to gold, Sneha.
Absolutely, lots to watch out for when it comes to crude and gold, given everything that's been happening globally and macroeconomically as well. With that,
If you like this video, then like, share and subscribe to ET Now.